Hello, in this video I'm going to talk about trend lines. I believe that this is the most important tool among them all, apart from Fibonacci. Trend lines, as the name says, are lines that mark the trend. That means that the price will follow them. For example, in this case, the price came up and goes down. It's gonna try again to make a new high, but it fails, and that's when you mark your trend line. The price is gonna bounce on it forever until something really interesting happens, such as a breakout, as you can see here. A breakout means that the price goes to the other side of the trend line, and once it does that, it usually returns to do a retest. In wave principle, what we expect here is to see an ABC above the trend line, and that's our entrance to go away. But we usually have to wait for this breakout to happen. If it doesn't happen, the price can go and on and on and on and on. Here is a simple way we can watch the trend line in action, is just following the price where it's going. The other way we can use it for the corrective wave is to mark it when the wave ends, and then we spot our C. When that happens, we mark our trend line here and we wait for a breakout and a retest. We already know that in the retest we're gonna see some kind of ABC to go down. That's when we get in. Also, we can duplicate this line and put it up here to find the wave C target. And this is all known as channel. A channel is just a trend line duplicated in another distance, but we're gonna see that in just a minute. Let's see some examples of trend lines. In this case, you can see that here it made a new top and then it went down. So I mark my trend line in the bottoms when the price is falling, and I can see here that it broke out here and it did a retest. Can you see it? Breakdown, retest, and goes away. Then the price stopped here and again here. So I trace my trend line here and I can see that it did here another bounce and then a breakout, ABC, a retest, and then goes down. Another trend line, breakout, retest, and go down again. I trace my trend line here and notice what happens. The price reacts. The price reacts. But once it crosses over, it is a breakout. It doesn't go away immediately. It returns A, B, and C. It matches a Fibonacci level, and that's when we want to get in. When Fibonacci and a retest of a breakout trend line happens. Let's see another example. Here we have the price falling after an ending diagonal. This is our impulse. It does an ABC. We use trend lines to paint the picture, not only to mark the trend, but also to paint it, because we use tops and bottoms. What happens when it breaks below? ABC retests the line and goes away. Then we mark our trend line on the tops, and we can see this action here, that the price keeps bouncing down. We use another trend line in the bottom when the price is rising, and once it broke below it, ABC, and it goes down. Another picture here, both trend lines to mark a picture, ABC, and down. Once the price break above this trend line, as you can see, it got stuck between this main trend line and this sub trend line. How do we use these both trend lines? Because here it's a top, so I leave my trend line here, but here it made a new top, but it came down again, what other people call fake out. What I do is use another trend line there and leave them. And what happens is here it does a bounce. It tried to go up again, it failed, and then finally it broke above these two trend lines, but the price was stuck between them. If it wasn't going up, it goes down and it continues to go down, but in this case it broke up and the price was starting to go away. In this case we can do the same. The price is falling here, respecting the trend line, is keeping going up. Once it broke above it, you can see here the arrow, it broke above it, ABC, another trend line up here, and it breaks above, it goes away. And you can do the same for every time a wave does a corrective phase. If the price is going down, you mark a trend line on the tops of them. Once it breaks above it, it goes away. Now I have a new top, so I can trace my new trend line here. And what happens afterwards? The price tried to get above it, it didn't do it. Then it did another fake out and it returned. Once it returns, it breaks below, go back up, couldn't do it, and then it goes away. And what happens with this trend line down here? The price keep bouncing up, keep bouncing up, keep bouncing up until this broke below. Once it broke below ABC in a Fibo level, retesting the trend line, and the price goes down. So basically what you want to spot in trend lines is once the price keep bouncing, you can put a short in here, you can sell, and another one here. Once the price break above it, you can stop selling and you can consider buying. The price is gonna come back. Not always is gonna touch the trend line, but it will for sure do some sort of retracement of the 382 or the 618, depending of the pattern that it's doing. But the price is gonna go back and then it goes away. So you don't buy here and you don't buy on the breakout. You just wait for the retracement and then move along with the wave. And when it comes to corrective phases, it's very interesting because you can spot our wave C with parallel channels. And also you can spot a break below, and that's where the confirmation comes on when it does a little smaller structure after the bigger structure up here. Now channeling the parallel channel is just the same. The parallel channel, what it does is another trend line duplicated in another range. So the price keeps bouncing inside of it forever unless something really interesting happens, such as a break above it, retest on top of the channel, and goes away. This is known as wave 3 once the price goes away. If the price stays inside the parallel channel, that is named a corrective wave. Usually 3 movements contained within a parallel channel means that it's a corrective wave, and that's where our wave C is going to be before the next impulse that breaks below, in this case, of the channel, ABC below it, retests the trend line, in this case the channel, and then goes away. So it's really interesting to also watch the middle trend line because sometimes the price gets stuck it and does exactly the same. Break above it, retest, and goes away, or it couldn't go up, try 2 times and then go down. So watch out for the middle channel because it's a decision place where price is gonna take a course. We can also watch that once the price keep bouncing on the bottom side of the channel and eventually break below it, it's gonna do the same. ABC, retest the channel, and then it goes down. Okay, so let's study a little bit more about channels. How do they work with the wave principle? In the wave principle, we state that we have 1, 2, 3, 4, 5. Usually these movements are contained within a parallel channel. Once the price reaches above it, and we know that there's like 5 movements, then we can expect that ABC go below the channel. In this case, 5 can be truncated, touching only the middle of the channel before breaking below. I already talked about corrective phases when we can spot the wave Z. It always matches a Fibonacci level, but sometimes it gets truncated into the middle channel before breaking below. We can also spot the wave 3 once it breaks above the trend line and then bounce from top of it, as you can see here. 1, 2, 3, 4, 5. Not entering wave 1 zone, bouncing on top of the channel. This is one of the best trade setups that you can find. And now let's see the 4 types of channeling based on the wave principle. In the wave principle, we want to spot 4 kinds of channeling. The first one is the base channel. The base channel can be drawn once you spot wave 1 and 2. Once that happens, what you do is trace your base channeling with 0 to 2 and then extend to 1. And that's how you're going to find 1, 2, 3, 4, 5. And when this happens, you're going to spot your wave for return in a Fibo level after wave 1 and 2 retraces to the proper retracement. That means that wave 1 and 2 is confirmed, and now you see a wave 3 breaking above the channel and expecting wave 4 to come back. The corrective phase channel, what you are expecting here is to find wave C target. It usually is drawn when wave 1 is finished and you can see the wave A and B are done. Once this happens, you trace your parallel channel from 1 to B and extend it to A. And then you can spot your C, especially if it matches a Fibonacci level. You can verify that this is true once wave 3 broke above this parallel channel, and it usually does the same of retest ABC here before going to your target. In the acceleration channel, what you want to spot here is how fast the wave 3 is going to go. The price is gonna keep inside of it until it breaks below this channel. Once this happens, wave 4 is going to start. But if it doesn't break below the structure of the channel, the price can go up for like many days or weeks depending of the cycle that you're watching. But usually this is what you want to expect here in the acceleration channel. Once it stops and breaks below it, the price is stopping for wave 4. How do you draw it? Is when you have the 1 and 2 market, so you can just use the parallel channel here and extend it to 1, and you keep following 3. For example, if the 3 goes up here, then you move your parallel channel like this. If it does something like this, then you move this parallel channel to the new top here and you just mark the bottom, and you keep doing that until this happens, until the break below this parallel channel. And on the deceleration channel, what you want to do is spot wave 4 target. It's the same as a corrective wave channel, but in this case you want to spot the wave 4. And usually you have two channels here. Remember the base channel? They usually match each other, and that's confluence. That's when you know it's more valid, when there you have more things matching up. So that's it, everything you need to know about channeling. But one thing is the theory, another thing is actually applying. So let's see some examples here. As you can see, the price broke below the trend line here, so I mark my parallel channel here and in the bottom of this, and watch this how it behaved. The price came back down, goes up, it bounces on top of it, and does an ending diagonal in the bottom of the channel. It goes up, a fake out here, the price goes down to the channel of the bottom of it, then it goes up again, it bounces on the top of it, and then it goes down. And what happens when it breaks above it? A, B, C, and then the price goes away. And I can use another parallel channel here, and maybe this is wave 4 to go up, who knows. But in this case, the price is out of this channel. But while the price is inside of it, the price can keep bouncing 1 and 2 until this usually decides where we have to go, where it goes below, where it goes up. Here's another example of a parallel channel. As you can see here, 0 to B, we extend to A, we can find C. Once it broke above this ending diagonal, ABC, it broke above this channel, and then it does 1, 2, 3, 4, 5. This is some kind of leading diagonal. But the thing that matters is that the price is inside of the channel. It keeps bouncing top, down, top, down, top, down, top, down. And here we can see that it left a wick in the middle of the channel, and then it broke below it. What happens after that is that we have 1, 2, 3, 4, 5 in the diagonal pattern. I trace my new channel like this, and notice what happens. The price came back up in this channel. It broke above this middle channel, and then eventually broke above it. ABC on top of another channel, and the price goes up. So I can mark my another and parallel channel here, and you can see that the price keeps bouncing on top of it. And this is also known as double channeling. This is when you use one channel on top of another, and you can see like two zones where the price keeps like bouncing on here, and then goes up and then goes down, but it continues inside of those parallel channels. It's the same if you use a big parallel channel and you keep bouncing in the middle channel. In this case, we have our ending diagonal, and then we can trace our parallel channel. The price goes up, down, up, down, up, and once it broke above it, it does an ABC, retest on the top of the channel, and then goes up. When this happens, I can trace another acceleration channel, and the price is going to continue moving inside of it until it breaks below. What happens after that is a wave 4. Wave 4 retouches the first channel that we had and the deceleration channel here, and we can spot this is wave C, A, B, C, and then it broke above this channel, and it can retest here, and then it goes away. And this is the last example. It's always the same. The price broke below this trend line. I mark my parallel channel here, and you can see that the price broke below this trend line, touches up above here, and it goes down, touches the downside of the channel, and it goes up, touches twice the upside part of the channel, and it goes down to the downside of the channel. Once it broke above this channel, it does an ABC, a running flat, and it goes away. And if you notice here, we have another channel that keeps bouncing on it, and when this happens, it retests on top of it, ABC, it touches the upside of it twice, and then the price move up again. So it's really interesting to watch this behavior of the prices when you watch the charts. So I recommend you to practice these things because parallel channels is one of the most powerful tools that you have out there. But before you use parallel channels, you have to understand how trend lines work. Just make sure your chart is in log scale, because that way the trend lines are actually painting things better in the chart. Just remember that parallel channel means three trend lines placed in a parallel way. That means that if I have my trend line here, I duplicate it, and that's my parallel channel, as you can see there. Okay, so let me explain how do you use the trend line that you have here in TradingView. You can find it here and save it here in your favorites. The trend line, the first thing that you need to do is trace the tops, trace the bottoms, and you can start to see shapes. And as you can see, I keep painting patterns until I can see them really clear. That's how we do it. You can also duplicate a trend line and move it. This is what parallel channel actually means. If I use my parallel channel here, I'm gonna see the same thing as if I duplicate the trend line. But once I do this, I can see that this here is a leading diagonal that is happening after my ABC here. Here is another ending diagonal, you can see here. 1, 2, 3, 4, 5. And all this is happening after an ending diagonal. 1, 2, 3, 4, 5. As you can see, trend lines can help us see the figures that normally we wouldn't see. But make sure log scale is on, because if you don't have it on, the figures are gonna see a little bit weird. For example, if I use my trend line here, I can see like this is going down because it's below the trend line. It retests and goes down, but it didn't. It went up. If I use my log scale on, what you're gonna see here is we're using the wicks. Always use the wick, never use the body. And you can see that the price fake out here and then it go up. And I use my another trend line here, and I can see that the price eventually going to the top. Let's see another example here. And you continue to mark the trend lines in the tops. You can see that this is a running flat, A, B, and C. Here we have some sort of ending diagonal. It broke up below. This is my wave A. When the price is going down, you trace the trend line on the top. And as you can see, the price tried to go up, it couldn't, and goes down again. What do you do here? You update your trend line, and you use another sub trend line like this. Once the price breaks above it, you update your sub trend line and you follow it. If the price is rising, what you want to do is trace your trend line on the bottom. Once the price broke below it, it's gonna fall. If the price starts rising again, you use the trend line on the bottoms, and as you can see here, the price follows it. And if you use the trend lines on top and bottoms, you can see here your A, B, and C. If the price is falling, you use your trend lines on top of it to notice where the break above it is happening. And as you can see here, it didn't make a new low, and then the price started rising. You can also trace your parallel channel here to see where it's going to end. And as you can see, the price keep bouncing inside of it, eventually fake out, return, broke below, and goes down. You can also trace your trend lines from tops to bottoms to start spotting your ABCs along the way. And as you can see, this is an A, B, and C. But this is a more complex corrective way, but I'm not going to talk about that right now. I'm just trying to make you see the patterns that normally people don't see it. You trace your trend lines from tops and bottoms, and you mark the pictures. You already know that this is my ending diagonal. And what happens next is the price broke below this structure, retest ABC, and goes down. So this is basically how you see a chart when you just open it. It looks a little bit chaotic. The first thing that I recommend people to do is stretch it. You don't want to see candles like this. You are not actually looking at something. Make sure your log scale is on and squeeze it. When you have all the chart squeezed, you can start using your trend lines and you can watch the action. If the price is going up, you want to trace your trend line on the bottom. Once it breaks below, you want to trace your trend line on the top. Once the price breaks above it, you trace your trend line on the top. And that's how you keep following the price. And you can see that it keeps making really interesting shapes once you do it. And you can see that once the price keeps falling, you just use your trend lines at the bottom, and you know that each time it breaks below it, it's gonna go down. As you can see here, it keeps going down. I keep tracing my trend lines there, and that's how you follow the price. Here you have an attempt to go up, so you pay attention to this. You use another trend line here, and what you can see here is that the price, when it comes into this kind of behavior, that the price falls into an apex between two trend lines, that's when explosive movement happened. For example, here, instead of going down, what it did is up, bounce on top of it, and then it started to move to the upside. And another way that you can use trend lines is using fractals. For example, I can use my trend line here in these two bottoms, and notice what happened if I extend it. The price couldn't go up, it goes down, but then it broke above it. Then it gets close to it and it goes up again. And you can see them all over the time. You can see that the price gets stuck between here, and once it broke above it, it goes away. Here's another trend line that I can put in here with these two tops, and you can start seeing things, for example, like this. You can see that the price bounced below this 1 and 2, and once it crosses over, it retests it and goes away, and then later on it came back here and then move again. So it's really interesting to play around with trend lines, not with only tops and bottoms, but also the rule of thumb here is the more places a price bounces on one trend line, the more valid and important that becomes. So you can play around with these fractal trend lines and not only the usual tops and bottoms trend lines. And keep in mind that when the price is getting stuck into apex, like for example here, the price is gonna squeeze like this, and if it breaks above, it's impulsive for up, but if it breaks below, it's impulsive for the downside. Hopefully you learn a lot from this video about trend lines and parallel channels. They are pretty useful to watch how the prices actually have a rhythm, a pattern, a figure, and you need to find these structures and know how to trade them. But first you need to trade your trend lines and then play around with parallel channels and see for yourself how the price moves inside of them and what happens once they get out of it. And that's it for this video. Hopefully it didn't get complicated for you and you can start practicing it, because trend lines are one of the most important tools that you will be using from now on if you really want to practice the wave principle.